All right, hello everyone. So let's take a look at the market today. Actually, I'm going to do a wrap up today. It's Friday, and as you know, I've been away this week, and I'm going to be away next week as well on the mountain. So let's take a look. All right. Now, as you know, Monday. Well, first of all, let's take a look at all the trading days. Right. These are the trading days I had for 19th to 23rd of January. As you know, they were posted on the 28th of December. So we had gold trading days Monday, Friday, euro dollar Wednesday, and I said Thursday or Friday as well because the market can take us there. And then Bitcoin Monday, Saturday, SP 500 Wednesday, Dow Jones Monday or Tuesday, Nasdaq Tuesday and Friday. And I've got the trade hours, as you know, still posted at the end of December for Monday, Tuesday, Wednesday, Thursday, Friday. Now remember, with gold, let's start off with gold anyway. As always, gold, as you know, we had a target all the way up here. So this is not a surprise at all for us. Trading day Monday, breakout nicely. It didn't quite come back down as I'd like it to have come down to, but what can you do? It doesn't always happen. Monday, and the market just rallied to the upside. When I did the video for that, I did say I'm not going to take that because it opened with a gap, and I don't like that kind of a trade unless the market pulls back. All right, so that's just my style of trading. I don't like to see the market doing all kinds of jumping up and down and then get surprised later on. Last week it did such a pullback, as you know. That was there on a Friday and then it picked up. So Monday opening with a gap, I wasn't really interested in it. So, but I did say we should be going to the upside. In the beginning of the week, I did say 4,850 to 5,000. That's our target zone. 4,850 done on a Thursday, 5,000 done today. I think it was 5,000, 4,975, I think. Yeah, nearly there, around there. Okay, so we should see 5,000, but in any case, that's how it is. Now, these are the trading hours. As you know, once you start and a breakout happens, that's it. You have to focus on going to the upside when the market pulls back intraday at a trading hour. So if we're going to the upside, two things are going to happen in a trading hour. We're either going to pull back, or we're going to break out at those hours. Okay, so they're really important, and this is why you've got to match your time with your technical analysis. Okay, so if you've got a technical analysis approach, which you should have, right, and you add time to it, then you can say, okay, this is a trading hour, right, we can break out so I can go in, boom, to the upside. Another trading hour. Now, when the market's done a move like that, obviously you don't want to be buying up here. All right, this is why I don't like to trade an up move unless we've pulled back. So that's an impulse wave. The market comes back into where the market took off before. This is trading hour. This is trading hour. I didn't have an hour here, but this was a trading hour as well. So the only place where you could have really entered here after this big fall was either going to be here or here. Now, if you entered here, that's the dip. So your stop loss needs to be below that. If you entered here on that bar, you could have put a tighter stop loss just around that low as well and just let it ride. Obviously, when the market's done a move to the upside, okay, it's good to wait for the retracement and then enter at a trading hour later on. And the beautiful thing about entering at trading hours in your bias direction is because you know when things are going to happen, more likely than not. All right, so today, Friday, is also trading day for gold. You can see the first thing the market's done is really sold off. This is London pre-trade session at the moment. Okay, so London right now, it is 8:33 a.m. All right, 11:33 my time, 8:33 in the morning. Just pre-trade session, market mucking around here. So if the market does come back down, there's room to go up again. But like I said, Friday is a trading day. What you should be doing, what you should have done, is take your profit there, and that's it. Call it a day for your gold trading all the way from Monday, swing day, trade day, into Friday. Let's take a look at the euro dollar. Now, euro dollar, if you watched the videos, I said we should have a Wednesday, Thursday, Friday, we should have the market going up into there. Okay, And that's exactly how it happened. The market going up, coming down on a Wednesday, going back up on a Thursday, and now we're on a Friday. This, when the market opened on Monday, okay, I said you could go and follow this all the way in there because that's the zone to do it in. Okay, so if you did that, you would have taken your profit. I can still keep this here, that's not a problem. And all I have to do is now, whoops, let's do this. Let me just move this while we're at it as well. All right, so there we are. Okay. All right. Okay. Al. All right. So he's excited about the snow. Right. This is the euro dollar. So euro dollar also all the way from down here going into the Wednesday, Thursday, Friday trade days. Okay. Nice and easy. I think this was an easy trade to really do because with the euro dollar we were bullish. We are bullish. Okay. And we've been bullish since right there. Okay, and now this is a nice consolidation happening on the monthly. We're dying to break to the upside. Okay, so for me, euro dollar is bullish, and this is the weekly chart. And you know, if we come back into zones, obviously we want to go to the upside. You know, going into 125, 1.25 is what I'd like to do. So we'll see how that pans out. If euro dollar comes back down again into this zone next week, going up again is going to be on the cards for us. But this is how the trading days worked. If you are trading the euro dollar, match your trading hours to it. Okay, because once you have direction, all right, then what you have to do is just wait for the breakout. For example, let's take a look at Tuesday. You can wait for a breakout or a pullback into your trading hour. 7:40 to 8:20 is going to be 6:40 to 7:20 on the platform. So 6:40 is going to be just there. And 7:20 is there. This is where the market is retracing. All right, so doing a bit of retracement. And then I had 11 to 11:40 to 12:55. So 10, 10:40, 11:55. So I've got 10. Let's see where that is. That's your 10. Market just going up into that direction. Alright, so it's just following all the way through. 10, 10:40, 11:55 should be around here. Alright, so we're pretty much there. Okay, so the market does a top here. And that's it. Okay, pushing to the upside all the way coming in from Monday. All right, now the trading hours here didn't really match any retracement because our bias is to the upside. It's just on the trading hours, you can see we're just pushing to the upside. Push here, a bit of retracement, but the general direction is push. This is why knowing the trading days is also important, because if I know the trading days, then I know what day I'm going into. Then you can match a trading hour or your technical analysis into that day. Let's take a look at Wednesday. So Wednesday, that was a trading day. So pull back on a Wednesday would have been okay. Let's see what hours we had. 8:35, 9:35 is 7:35. Let's start off with there. 7:35 is about there. And then what? 8:35, 12:20 makes 11:20. 8:35 is there. And then 12:20 makes 11:20. 11:20 is here. And then next trade hours is 1:15 on the platform. 2:15 here is 1:15 on the platform because the platform is 1 hour behind. 1:15 is right there. All right, so this is nice because the market's pulled back right into our trading hours and takes off. And then I've got 3:50. It can turn or keep going. Let's take a look at 350, which is 250 on the platform. 250 is there. All right, 250. Market goes up to here and then boom down. All right, and that's a 250. Targeting 540 to 650, which is 440, 550. 440 to 550 is there. So the market targeted that zone. And then afterwards, it's tricky. There's a price target. If there is a price target, follow through and manage it into Asia 215. Asia 215 should be 115 on the platform. And that is going to be 115 is right there, guys. 115 is there. All right, so that's not bad at all. All right, 115 Asia session. And then the market picks up from there, as you can see. So let's just get rid of that. All good. Let's take a look at Bitcoin. Now with Bitcoin, I said don't muck around because we're in the zone, but a trading day is tomorrow. Okay, remember on Bitcoin, trading day Monday, Saturday. So Monday was here. Okay, it was here, as you can see, and from the highs they brought it down into here. On the video for Tuesday, I said, guys, be careful for this 11 o'clock business right here. And I said, if it breaks down here, don't stand in front of it. All right, from here, if it breaks down, don't stand in front of it because it will come down. Okay, and on Tuesday, I said we might have a flow day. So this was a trade hour we needed to take care of. And if you watch the video as well, this is the same for gold as well. If you take a look at gold Tuesday, all right, you'll see that's when the market broke out. Okay, so there you go. Market breaks to the upside, and I said if it breaks out, don't try to sell it because our bias is to the upside in any case. Okay, and on Bitcoin as well, remember I said big fish eat little fish, and the weekly chart is down. So we still have room for this to come down. So there's no really need to push your luck. But if you wanted to buy that, okay, you needed to wait for this hour to eventuate, because then you see the breakdown. Then you say, okay, I'm not buying this. Okay, what you can do afterwards, obviously sell it off. Okay, because once it breaks, like I said, it should flow through, and all day it went into there. And then on Wednesday, Thursday, Friday, we're at today, I said really don't muck around with it because the trading day is going to be on Saturday, and we are, as you can see, at a zone where the market has been dipped in so many times. So this is more likely to break down. If it goes up, they will sell again, I reckon, to push to the downside, and on the weekly will probably come down. Okay, so be mindful. Let's take a look at the indices shortly and check it out. Now, as you know, with the indices, we had SP 500 Wednesday, Dow Jones Monday, Tuesday, NASDAQ Tuesday, Friday. So if I take a look, let's see SP 500 Wednesday. SP 500 Wednesday. Now with the SP 500 in the indices, I did say because we are down, it's a trade day, you want to go up to close gaps, you can. So Wednesday going up, closing gaps is all good. And now here we are. Okay, and this is also what I said in the video, especially for NASDAQ, because NASDAQ was looking clean in doing so. So that kind of moved all the way into that gap filling there. And then Dow Jones, same thing here, Wednesday, going up, closing gap, same thing. And that was Dow Jones. Now NASDAQ as well, Wednesday, Thursday, Friday, coming in, filling gap, and all too easy. All right, so I did say if you want to go up from here, I'm okay with that, no big deal. And that's it. It's a bit choppy and sideways, but the thing is this: if you know the swing days, then you know when you're highly likely to reverse from a low or from a high. So that makes trading a lot easier. And also, if you put your trading hours in, let's see, for example, let's take a look at Wednesday, right? Because Wednesday was a trading day. Let's see what I had on a Wednesday for the New York session. Let's see, I had 350, which is 250 on the platform. This is, okay, so this is 250 there, right on that bar. All right, so that would have been your entry. Your stop loss would have been around here somewhere, slightly under. Push to the upside, fill in the gap, call it a day, and bye. All right, and that's basically it. I did say it can keep going to 540 to 650, which is 440, 650 is 550, so that's your target. Nice and easy. Market retraces. Let's see if I had an hour for there. I didn't. I did say after 650, which is 550 on the platform, that line I just drew, I said afterwards it's tricky if there's a price target follow through and can manage trade into Asia 215. We did have a price target for all the indices. What were they? It was the gap fill, which was there. All right. That was the gap fill. So if you follow through to the price target, all good. All right, so I hope that helps. Next week, you already know what's going on. Now I'm still on the mountain, so I'm going to try to get some stuff done for February. Maybe I'll put February like the first week, second week, as I do them, I'll put them up on the members area. Okay, and that's basically it. Now, also one more thing, I'll do another video for that one on the stuff you see on the what you call it, chart. All right, so you see sometimes I've got here certain lines. I'm doing something with the system, so it's going to make life a bit more easier. Then no matter what your trading strategy is, whether you're trading smart money, demand, supply, volume, profile, whatever you're trading, it won't matter. All you need to do, you're just going to select the template, and then you're just going to put the time hours in, so it's going to all match out fine. That's the new automated technical analysis we're going to do hopefully on the MetaTrader 5. I'm trying to find a Upwork programmer for that. All right, have a good one.